Hey guys, I'm here today to share with you how to buy a $400,000 house with a minimum down payment. And I prepared this for my buddy Joe the plumber, but he agreed to let me share it with you. Here we go. Pretty pictures, moving on, getting to the meat of it, the total cost analysis. So here's the deal. With a minimum FHA, minimum down FHA, we got 3.5% down payment. We got 4.75%, that's today's rates as of May 19th, 2010. 30-year fixed, payment of $2,059, and mortgage insurance of $181. So you've got your monthly payment of $2,240. Then what I'm doing over here is, and the closing total cash to close of $27,556. Then I'm going to show you what, if you put a little bit more money down, what a 95% FHA looks like. You still got the 4.75% interest rate, and you've got a 30-year fixed. The payment goes down a little bit, and the mortgage insurance goes down a little bit. So it's about $50 a month cheaper than this one. This net savings column it shows you that the 95% conventional is the cheapest payment. Oh, excuse me, the worst payment. And then these are $126 a month better than that. This is $75 a month better than that. And then the 90% conventional is $233 better than that. But of course, that cash to close is higher. Sorry, I'm jumping around. So the FHA, you get a little benefit with a better payment because you just owe less, and you get a little bit better factor on the mortgage insurance. Here's the deal. When you look at the 95% FHA compared to the 95% conventional, you owe a little bit more, less money here because you don't have the upfront mortgage insurance premium added in. So you've got a smaller payment, $1,982, but your mortgage insurance is almost double. It's about double what this one is. So FHA just says, hey, okay, look, guys, we're going to charge you 2.25% up front and a smaller amount monthly. Conventional says nothing up front, a larger amount monthly. So this is $126 a month better than this. Just based on payment alone, it's a better deal. Then the cash to close is basically about the same. And with if you decide to go with FHA based on the comparison of these two, then your choice is, well, do I want to conserve cash or not? Then just to take it the next step, 90% conventional, you put 10% down, still got the same interest rate, 30-year fixed, your payments go down, and your monthly mortgage insurance factor goes way down. It gets much better if you put 10% down. So this is the best deal, but of course it comes at a price tag of $53,000 to close. So I don't like to, Joe the plumber might be excited about, like, hey, this is $126 a month better than this, and this is still better than this, and I put less money down, so I'll take it. My concern I want people to think about is the upfront mortgage insurance premium, and it is added to the loan. So we're going to take a look. That's what this next page comes in handy for. Total cost analysis. I got my green arrow here pointing at the fact that it's 72 months. I'm projecting out 6 years out, and I'm going to look at the total payment, the total principal amount paid, the interest and mortgage insurance paid, the balance left, and the closing in points. Now, the closing in points, it's taking into account the amount that was financed in. And the big takeaway here is, let's just take a look at the 95% FHA and the 95% conventional. You owe almost $8,000 more on the FHA. And I'm not saying that that's a horrible thing. If you're going to be there for a long time, this one starts to even out over time. And but over 6 years' time, it's $5,600 better than this one. This one is still $2,400 better than this one. And I'm going to share with you on the last page here. What I've done is the program details. All of this stuff is the same as the first page. And the big deal is I just want to show with you the homeowner's insurance and the property taxes. They're basically about the same. So it's got the total principal and interest, taxes, and insurance payment. That's it. Give me a call. Have a great day.